Hi, this is Richard Fields with this week's Report from the Fields. Today, let's talk about what its proponents call industrial policy. Simply defined, industrial policy is when governments restrict what would happen in a laissez-faire economy in various ways. Those ways range from full government ownership and control of nearly everything in the economy. Under laissez-faire, there would be no government ownership or control of anything in the economy. Modern mixed economies describe everything we are contemporaneously familiar with. The tools to achieve industrial policy are varied and many. They include outright ownership of businesses, tariffs, trade protections, import-export controls, subsidies, tax incentives, public procurement or government buying stuff from favored suppliers, regulations, research grants, building infrastructure, and government-provided skills training. There are no historical examples where economies are entirely controlled by government, and none where pure laissez-faire is practiced. But there is a spectrum ranging from lots of government control to minimal government control. That spectrum runs from communism as practiced in the USSR under Stalin, China under Mao, and North Korea under three generations of the Kim family, to the largely free market economies in, say, Argentina and the United States in the latter 19th century into the early 20th century. The difference in economic circumstances for the people is stark. Mostly communist socialist economies like the USSR, Maoist China, and Kim-ruled North Korea led to profound economic depression, including mass starvation. Mostly laissez-faire policies in the free market era of 1880 to 1910 actually, led to the fastest real per capita income growth in the world for Argentina and the United States. Different countries in different areas with differing degrees of government control of the economy yield results somewhere in between. Over the long run, free markets work better for the average person than countries using industrial policy. There are both moral and pragmatic reasons why that is so. Morally, industrial policy usually involves a violation of individual rights, particularly property rights. For example, import controls and tariffs prevent people from trading with each other on mutually agreeable terms based on the geography of where they happen to live. Subsidies and regulations make it difficult for market participants to mutually agree on price without the government's hand on the scale. Pragmatically, government ownership of all or parts of business invites cronyism, political favoritism, and graft. All of the above increase the cost of goods and services, with the increase in price going into the pockets of politicians and bureaucrats. Free market prices are fair prices. They are the very definition of what buyers and sellers think is a good deal. Under industrial policy, prices reflect what politicians and bureaucrats think should be fair prices. It lets politicians and bureaucrats pick winners and losers, usually on purpose. Industrial policy is really the descendant of the medieval guild system, where craftsmen with the power of government backing them up could control who could engage in the craft and set oligopoly prices. What are present-day politicians doing? Bernie Sanders thinks the government should own 50% of SpaceX and AI. Elizabeth Warren wanted to prevent the initial public offering of SpaceX entirely because she disagreed with the price that willing buyers and sellers of the stock agreed upon. They represent the full-on communist, socialist side of the spectrum. With his tariffs, import and export controls, tax incentives, and partial government ownership of upwards of a dozen companies, including Intel, Donald Trump isn't much better. One of the only free market Republicans, Thomas Massie, was primaried by Trump in the most expensive race in House history because Trump didn't think he was loyal enough, and AIPAC didn't like his policy on not going to war with Iran. Wars of choice, like the U.S. attack on Iran, are a huge boon to the defense industry. In short, free market's good, industrial policy bad. the inner party of Democrats and Republicans is force-feeding us various flavors of industrial policy. Only libertarians are defenders of free markets, the right of people to make their own decisions about who to trade with and at what price. I'm Richard Fields, and that's this week's Report from the Fields. See you again next week.